All right, traders, welcome back to the boot camp. It is currently day 9, and you have embarked today on my favorite day to teach. Historically, the most difficult day for people to pick up on, but it is also historically the day that people are waiting for, because really one of the main reasons a lot of people ask how I trade, because I trade in such a unique way with sequence. So starting today through the next 9 days, obviously we're only halfway through this boot camp, so hopefully you guys have been getting a lot of value out of it so far, being that you're only halfway through. The sequence is really the trick. It's what I've used consistently for years to profit in the market, and it's really the tool that has helped me really find those fantastic opportunities, and those opportunities that nobody else saw coming. And so structure gives you, an upper hand in the market, but sequence with structure is what I have found give me the most success. And so, a couple points before we get into this, and really today is less about, definitions and talking about it, more about application and finding it and quizzing and trying to push you guys to learn it. But just so you understand, the market is always, as you've seen, the market isn't just perfect. We draw it out like it is, but it moves in choppy waves, and it moves in sequences. And if you can learn and teach yourself to identify what these chops, what these retracements, what these expansions are, it'll always give you an upper hand in the market, whether that's finding a trend reversal, whether that's finding a trend continuation, an entry, etc. And so understand that the markets are always moving in these sequences or waves. And in CPSG, what I'm going to teach you is, mostly how to swing or trade, I should say, in a 3 swing. But understand that we can trade in any 3, 5, 7, or 11 swing sequence with trend. Highlighted in color there is with trend. It's important that you understand with trend, because when we're trading with the trend, basically it gives us that cushion to be wrong. And if you trade with the trend, you have basically trading wheels in the market. And so each swing is defined when an extension is met of some sort, and that is going to be foreign to you for a minute. And today and in day 10 and so on and so forth, we'll continue to add on how to find that extension, how to find these swings. And today we're not going to focus on anything about measuring. We're not going to focus on any tools. I want to be sure that you guys understand today's, because if you don't understand today's, then it's going to be much more difficult to understand any further. But today we're going to talk about, basically trying to learn how to find these swings in the market. And so what I'm going to first show you is just an abstract drawing. Can you guys guess real quick what swings these are? And what I'm going to do is I'm just going to draw it up above, and you guys can try to start to identify. But this is actually a 3 swing. This is actually a 5. This is a 7. And this is an 11. Okay? Now, how we get there, you guys may not know. And today's goal is to teach you guys how to identify, how to label, and what it's going to help you is so that you can mark up the charts better into the future. The better you can mark up the charts, the better you can measure, the more accurate you can be, the better it's going to be. Because if you understand this method, my live room in particular is going to be that much easier for you, because you're going to understand what I'm saying, whether it's in a 3, 5, 7, or 11 swing or something more advanced that we'll go into. It'll be that much easier. So here's a quick look at these swings, and now let's look at how they come about. As always, and as we've talked about in the past, we always start at what? Origin point. Everything starts at the origin point. And you can really, frankly, this is your strategy as much as it's mine now. I'm teaching you everything I know in regards to the sequence. And so you can name this whatever you want. If you want that to be starting point, call it starting point. If you want it to be origin, call it origin. If you want it to be 0, call it 0. It really doesn't matter. But everything, for my intensive purposes, has been taught via origin. So I'll continue to hold that name in origin. And so as you can see, every swing is labeled with a new number. 1, 2, 3. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5, 6, 7. 1, 2, 3, 4, all the way up to 11. All right, and as we've talked about, in this case here, we're only looking at trading right here at these peaks. And in the getting risk-free segment, we'll talk about why we can trade at each of these peaks and still come out profitable. Okay? But first things first is understand this. This is how you're going to be able to label them. There's not much I can talk about in regards to labeling. We have to get on the charts and actually do it. But this is what you're going to have to be able to know as far as labeling. Now, before we get into labeling and before I really dig deep, into all of this information. The biggest issue and the biggest thing you want to write down in your notebook if you're taking notes is people try to get too intricate with this. They pay more attention to that small little candle that's spiked, and they call that point 1 rather than the major swing that you should be looking at. And so that's the important, the important key information nugget that you need to get out of today's lesson is understanding what to identify. So this works both in bullish and in bearish ways. As you can see, the origin just starts at the top if we're going down. So this is just the same picture literally reversed on Photoshop to show you guys what that looks like. And so, this is important to remember as well, because all these are pullbacks after a swing. So this would have been a bullish market, as you can see this way, a bullish market coming up, and then this is our pullback. And we're always looking to get long in a bullish market, or going back here, this would be a bearish market coming down and then pulling back, and we're looking to get short in a bearish market. Really all we're doing is we're taking advantage of a pullback in a much more intricate way to give us a more accurate entry point. The more accurate you can be on your entry point, the better, because you're going to be just that much more confident. Doesn't mean you're going to have less drawdown necessarily, but in general it's going to be that much closer to where the reversal is going to actually happen. So what I want to do now is really start to challenge you guys a bit. For a second, I want to draw you, basically show you this picture and walk you through what my process would be to identifying a pullback. Keep in mind that really the only thing you're paying attention to in the sequence is the pullback. Right now. That's all we're paying attention to. In the targeting video, we'll talk about the with trend extensions, and that's used for targeting. But right now we're talking about the pullback, which is basically defining and helping us define our entry. And so what I want to do is I want you guys to walk through yourselves with this. If I mention pullback, what would you look for? Well, the first thing I want to do in this, same as what we've learned, and everything, as you can probably feel, is very cohesive with the boot camp. We learned about our support and resistance. We learned about all that information. The first thing we want to do, though, even back then, and that basic information was what? We wanted to define the trend. If we can't define the trend, we can't find the opportunity. We can't find the trade. Is there a trend in this market? Is there a trend in this picture? What's the underlying trend? It's bullish, right? We can see that the market enters the picture here. Current price is here. Obviously this one's higher, and you see that this is bullish. If we have a bullish market, we're looking for a what? A bearish pullback. If we have a bullish market, we're looking for a bearish pullback. All we're doing is looking for the market to pull us back in to the price. So the goal here, and if you have to pause and just try to test yourself, don't just rush through this. If you have to pause it, pause it. Look at this real quick. Don't overcomplicate it. First, I already gave you the answer. Can you define the trend and draw it out? We already did that. But can you find the three-wave sequence in this? And I gave you a hint there. It's only 3. Can you find it? So what you're doing is you're looking for where does the market change from bullish to bearish, find that origin point, find after its first big expansion, and then find its deepest pullback, and that's your 2. All right, so here's what it looks like. As you can see, bullish trend, we called for that. Very simple. So then when the market gets to the top here and changes direction, it changes from up to down, what do? We look at the origin. Of course, I circled it. And then you first look for that first big push where point 1 lies. Once you found that, all you're doing is looking for its deepest pullback. Okay? Now, nugget time, obviously, for those of you guys that are watching this right now, are always waiting for these moments. You will never know what point 2 is. Write this down. You will never know what point 2 is until point 1 has been broken. Let me repeat that. You will never know what point 2 is until point 1 has been broken. So what that means is that if we go back here, pretend that price is currently here. Ignore everything over here, and if I can actually do this, I will. ink color black. It's going to be kind of difficult to do that super fast. But erase all of this. Pretend that this isn't here for a minute, okay? That's pretty good, actually. So market price is only here. If you're trying to find a three-leg sequence, point 1 always has to be broken. So in this case, we have origin here, 1 here. Okay, here's where price has gotten to. Price has only gotten to there. It's never broken below this low. And so why I say that point 1 has to be broken is, what if this market is choppy but decides to make one strike even higher than here? That makes this point 2. So point 1 will always have to be broken. And so the reason we were able to define this is 1, this is 2, is that once this low here was broken in this area, we knew that this was 2. That way we can actually start to get our measurements out with our Fibonacci expansion, which is of course on tomorrow's agenda. And so what you're doing is you're looking for point 1 to being broken. And that's why we were able to label this easily. We're able to label this as origin, this is 1, this is 2, and then of course is 3. And as you can see, looking for long positions. Why? The preceding trend, the trend before we found and labeled the pullback of the sequence, was bullish. If the trend before was bullish, you're looking to continue in that direction. If you're looking to continue that direction, of course you're looking to get long. So let's take a look at another. Same question. Can you find the underlying trend? What is the general trend, and can you find the sequence? Now in this one, I think this one is actually, I should have probably reversed this. I think this one might be a little bit easier to find than the previous picture. Obviously the trend, I mean, it should be pretty obvious to you guys what the trend is in this situation. Look on the left side of the chart, you can see that it's predominantly going in what way? Down. So we know already that this is bearish. So you know that you're looking for if it's a bearish market, your origin point will always be at the bottom of the chart. You'll be looking for that first expansion, the deepest pullback, and then of course up into the 3. So this one shouldn't be as hard. Once again, you can't define point 3 until point 1, or can't define point 2 or 3 until point 1 is being broken. So as you can see, this is an overall a very bearish market. Okay, this is a very bearish market. And so what your goal will be to do in this extremely bearish market is look for short entries around that 3 point. Now you might be asking, how do I know when it's 3? That's what we'll talk about in the next video. What we're looking for is very simple. We're looking for a Fibonacci expansion, which is a 100 level. And we'll have to talk about that once again in the next video. But what I want to do now is I want to go over to the charts. And I want to just talk about it for just a second, just on a chart analysis standpoint. And so what I want to now do is go over to the charts. And so we're going to go over the charts real quick and take a look at everything that we can. Alright guys, so we're back on the charts, and as you can see from last video, same markup is here. Now obviously this markup needs to stay, but for the sake of the video, I'm gonna kind of color code some different things. And so I'm going to change what our drawings are to, say, a light aqua, so you guys can see it a little bit easier. So what I want to show you guys now is, how I label these in real time. And so, excuse me, keep in mind that the time frame with this information, the time frame really does not matter. Predominantly, you guys will notice in my live rooms that I trade longer term. And that's been known for me for a long time. I like to trade long term, and long term trading has been where I have a lot of, I guess I get a lot of leeway, and I have more room for error. But with that being said, there is no reason, and there's nothing wrong of trading this exact method on a shorter term time frame, whether that's an hour or 15 minute. And so here's an example of a daily time frame on the pound yen. And what I want to start by doing is defining, what has been the underlying trend overall for long term. And I can see that overall this chart has come in and it's gone up and up and up. And this is our first real nice pullback. And so obviously we've marked up our support and resistance levels. And we see this, and we can continue to draw these as the market progresses. And in fact, we could continue to draw these through here. But what we want to do is we want to begin by defining what we just talked about, which was our origin, our 1, our 2, and our 3, so that we can start to learn for our entries. And in next video we're going to learn about Fibonacci expansion tool, and that will allow us to then know where we're going to enter, and then everything really just comes together. And so if we have a bullish market, our origin point will always be at the top. If we have a bearish market, our origin point's at the bottom. In this case, we of course have a extremely bullish market. And so what I'll do is I'll change this to yellow. This top is our origin point. This is where the market has stopped. It's gone up and up and up all the way up this. It stopped and then started to reverse out. Okay? From origin, the first thing I always do, and it's kind of a cliche thing, or not even cliche, it's just kind of a funny thing that I like to do, but if you have trouble ever trying to define point 1 or anything like that, what I say is squint. And I say squint, and I mean with your eyes, because it takes away all these little peaks in here, so you can't see them as easy, and all you can see is the colors right here. And you can see just the general color. And so I see people all the time getting so caught up in these little spikes in here when they should be paying more attention to outlining the market. And so from our origin point, obviously for point 1, our goal is to find that first major expansion back in. So if it's a bullish trend, we're looking for our first major bearish pullback, origin to 1. And so of course once we can get to that, we look for our deepest pullback. I look to the right, I notice that this point has been broken, so I know that I have a point 2. All I have to do is look for the highest peak after this that doesn't take out origin. So I see this as point 2 because it's my highest peak since origin. I label this as point 2, and then point 3 is labeled at the 100 extension. The reason that I will not draw it today is that is for tomorrow's video. But the 100 extension will be painted. What I mean by that is it'll draw it for us. It'll be a tool that we just use, and the tool does it all for us, so it makes our life really easy. And once we get that 100 level, that's when we utilize all of our other techniques and our structural biases that we have drawn already to combine the two, and we build a reason and we build a case for entry. And so when we start to do this, you'll start to see this come together. Okay, so if I go to a different chart, and I talk about this all the time with people, we could do a shorter term time frame here. Here's a real-time idea. All right, so I'm going to pay more attention now to this chart. And so as I can see, this has been predominantly a bearish market. So if it's been a bearish market, my origin will always be on bottom, and I'm looking for a pullback up and in. Okay? And so from that origin point, what's the first thing I do, as I've talked about? You look for that first big expansion. Okay, origin down here, first big expansion. And then we look for our first pullback. Once we get that pullback, we notice that point 1 has been broken, which is right here. And we're looking higher into our entry zone. You might be asking yourself, how do we enter? That is off of the reasoning for entry, which we talked about, which is support and resistance and the 100 level, in which we haven't gotten into the 100 level, which is tomorrow. So we're going to use these same two charts in tomorrow's video actually to measure that. Okay, so see what we find right now is just basically, it's very simple. All we're trying to do is find the trend, and we're trying to trade with the trend. So all we're trying to is find a good area where this market will pull back into, reverse out of, we can trade with the trend and make some money. This market, ever since way down here, has been extraordinarily divergent as well. And so one of the things that we talk about, one of the nuggets that we're going to get out of in future videos is utilizing this RSI as well. And so I just wanted to give you guys just a glimpse of that just for a second, so you know that there's more to this. Okay, So once again, when you look at these charts and when we go back and pay attention to really anything, all we're trying to do is find what the defining trend is, find the origin, find the 1, find the 2, find the 3 in today's video. I don't want you to pay any more attention to the expansion, the 100 level, anything I said with the RSI structurally, anything like that. You're trying to pay attention to just if you can label them correctly. And so practice labeling these, and we'll start, we're going to have people posting these at different times. And so get them ready, get your homework ready, so when you have good questions, when you have a chance to ask a question of an instructor or an educator or a friend that's great at trading and they know this method, show it to them and see what you're doing correctly, see what you're doing wrong. The only way to succeed is practicing. Once again, I have to keep pounding in your head. There is no magic wand I can wave over your forehead that is going to make you succeed in this market. You have to do it. You have to see it yourself. I can't force it to you. And so today's information is extremely important. Maybe the most important day of the entire course is today. If you can understand how to start to label these, you're not going to be perfect at the beginning. If you can understand how to start labeling these and grow from there, and you can really get into it over and over and over again, and you can start to understand everything together, that's when you're going to start seeing success spiral in your own direction, in the good direction. So anyway, I will see you guys back here for day 10 to really get into how to pinpoint entry zones, but basically utilize, we're just going to talk about utilizing the Fibonacci extension tool and what it means for you.